Once again, we see an intense movement demonstrating an unstable and volatile market. So let's talk about how to proceed at a time like this, what the market's main turning points are, and of course, how the price reacts to everything that's happening right here, right now. Because this is the Finance Hydra channel where we analyze the market through the lens of technical analysis, studying price movements in order to design intelligent strategies that help us to trade without fear or stress. Even at a time like this, we can help you with that. Here, we analyze the market without bias or emotions, always with a practical trader-to-trader focus. My name is Nathan. Welcome to another daily analysis video. And yes, we see the SPY correcting today, and I know we are actually crashing more than 4%. And in any normal circumstance, that would be a reason to panic, all right? Many people would start to panic over here, but since the volatility is extremely high, this drop does not seem that scary at all in this specific circumstance, because yesterday alone, we went up more than 10%. SPY went up 10.5%. So seeing the SPY correcting 4%, it looks normal. Okay, but that's because the volatility is extremely high. Now, what's the problem over here? The problem is that the SPY is correcting below the 21-day EMA, the exponential moving average on the daily chart. And as long as SPY's price stays below this support level, this resistance level, the trend is not supposed to reverse. What's more, we found a crystal clear resistance level right below the 549, the previous bottom signal over here, now top signal over here. So previous support level acting as current resistance level. So it is not surprising to see the SPY losing momentum below this double resistance level, but still, it is quite annoying because we could continue the bearish momentum observed on the daily chart, because we are still making lower highs, lower lows, right? We don't see higher highs, higher lows yet. The trend is not clearly bullish yet. I know we could bounce, we could recover, but for now, there is no meaningful bottom signal triggered yet. What's more, when we take a look at the weekly chart, it's okay. We are reacting above the 493 support level, the previous support level from April 2024. So precisely 1 year ago, we found a support level at this price level. Now we are back to this key point. The week is not over yet, but if the SPY actually materializes a bottom signal above this support level on the weekly chart, then okay, I will be more convinced about a bullish reaction on the weekly chart, suggesting another rally over here medium-term wise. But again, it is very complicated to work with a bullish case as long as SPY's price stays below this 21-day EMA, below this 549 resistance area. Okay, so we gotta break this key point as soon as possible. Now, what could completely reject any bullish possibility on the SPY ETF over here? Well, if we completely reject yesterday's candle, which was phenomenal, all right, which was simply phenomenal, by losing its low, by losing the 493, then okay, then we are going to reject any medium-term bounce, any possibility of a medium-term bounce on the daily chart, suggesting further continuation of the bearish momentum, medium-term wise and long-term wise as well, possibly to seek its next support level, maybe at the 409, okay, which is the next technical support level for the SPY ETF on the weekly chart, long-term wise, okay? Now, it is not going to be easy to reject yesterday's bar. Okay, not at all. It is going to be extremely difficult, but it is possible. Okay, especially with the high volatility over here. Now, some of you guys ask me, Nathan, don't you read the news over here, because you are always so focused on the technicals, right? And guys, of course I do. I'm not oblivious to what's going on, okay, to the tariff war, etc. But here in this channel, that's not our focus, okay? Because talking about these news, well, every single person in this entire planet knows what's going on. So I don't want to repeat what everyone knows over here, okay? I want to bring you guys new information, strategies, how to use technical analysis to design intelligent strategies. That's my focus, okay? So I don't want to waste my time talking about news that every single person already knows, okay? So, and of course, I want to make my videos very, very short, very quick, okay? So, preferably about 5 minutes, all right? So, guys, I don't have any time to waste over here, so let's do our complete analysis. Let's analyze SPY, QQQ, Nvidia, Tesla, AMD, Palantir, Meta, Netflix, many other stocks in this video as quickly as possible, okay? Within 5 minutes. I still believe that's going to be possible one day, okay? So, but for now, well, let's just focus on what's really important, all right? So that's it for the SPY. These are the key points, okay? Let's watch these key points right now from here. The QQQ shares a similar chart structure, and the key point over here, also the key resistance level is also a double resistance level. We see this red line around 467 near the 21-day EMA. As long as the QQQ stays below this double resistance level, we are not going to turn bullish again, okay? We are still in bearish territory. We are still not reacting at all. So we can't say that the QQQ is extremely bullish right now yet, because we are still below critical resistance levels, all right? And again, we are collapsing 4.26%. We are dropping less than the SPY ETF. That's quite curious. Maybe tech stocks are indeed oversold right now. So that's a real possibility for the QQQ. And if you ask me, only if we break 467, we are going to trigger a better, more reliable bullish reversal chart pattern over here. As long as we don't, we are going to continue the bearish sentiment. However, I do understand that right now we are in a very promising situation, okay? This reaction is quite promising because it is a bottom signal above a crystal clear support level. So that's what the QQQ needs in order to reverse this medium-term bearish sentiment. We only gotta see the breakout of a few resistance levels first, because guys, remember, trading is reactive. It is not predictive, okay? We don't know what's going to happen next, all right? The market is and always has been unpredictable, okay? And guys, since its conception, literally centuries ago, technical analysis was never intended to predict price movement. That's not what Munehisa Homa, the samurai trader, had in mind in the first place, but rather to help us design strategies to manage risk appropriately. Because if you ask me, Nathan, what's more important, TA or risk management? Risk management is more important. What is more important, fundamental analysis or risk management? Risk management is more important. Any other tool against risk management wins. That's the most important thing. And I do love technical analysis so much because it is way easier to work with the right risk management using charts, fundamental analysis, and this is my personal opinion, okay? I do know fundamental analysis, I study fundamentals, okay? I have many long-term investments based only on fundamental analysis, all right? But fundamental analysis has a less it is too abstract regarding risk management, okay? I prefer to use charts, technical analysis in conjunction with other tools because that's the perfect tool to analyze risk, okay? Technical analysis is just perfect for that, and that's how we use it, okay? So, guys, in order to mitigate losses and maximize profits, and preferably with a statistical advantage in our favor, we use technical analysis. That's how we work on this channel. And of course, in this video, we are going to talk about how to proceed at a time like this using risk management, okay? So that's how we do here in this channel, working calmly, okay, wisely. Always know, I always tell you guys every single video, right? Know where your stop loss is going to be. Know where your target is going to be. Know these things before you enter a trade, all right? If you don't know these things, you are just betting on the market. And the real traders are anyone who's at least not reckless in this market will work that way, okay? We do not like to bet, all right? We don't bet. We work strategically, always with the goal of mitigating losses and maximizing profits. That's how we do here on this channel. Now, back to our analysis, Nvidia. You may ask, Nathan, is Nvidia going to turn bullish again? It is looking very promising. Better than the SPY, better than the QQQ, and maybe this is one of the reasons why the QQQ is not dropping that much, okay? It is dropping less than the SPY ETF. Tech stocks are too oversold right now at this moment, and we see yesterday's bar as one of the most phenomenal bars over here, right? Plus 18.72%, okay? It is going to be very, very difficult for Nvidia to reject this bar. Again, not impossible, but very difficult. And this bar appeared above the 90s support level. As we can see over here, the SPY, yesterday's bar was above, right above this critical support level. The QQQ had yesterday's bar above its critical support level. Nvidia is above, way above its support level, okay? So it is not in this area. Yesterday's low is clearly above the 90s, so it is clearly stronger. But what's the catch over here? We are still below the 21-day EMA. We have yet to see a meaningful bullish reversal chart pattern going on over here, so we are still in bearish territory. So could we still lose yesterday's low and reject any bullish possibility? Yes, we could. Of course, there is no confirmation of this scenario either because we are still above yesterday's low, so okay, the situation is under control. On the 1 hour chart, we see a new series of higher highs, higher lows. So short-term wise, Nvidia is clearly bullish again. Okay, the only thing missing is the breakout of this key resistance level, which is this yellow area again. Okay, we gotta break the 115 key point in order to materialize a better, more interesting, more robust bullish reaction. Okay, so that's the key point. Assuming you are bullish on Nvidia, right? You wanna see Nvidia breaking in the next few days or maybe next week, all right? Because tomorrow is Friday. The weekly candle will close tomorrow, okay? So that's going to be another very interesting catalyst because if we close making a bottom signal above the 90s, will be undeniably a very nice bullish indicator. For some reason, investors are aggressively buying in this area. For some reason, we do not know why. Okay, we don't know why, and we don't need to know why. All that we know is the information what the smart money is doing right here, right now. And again, that's where TA helps us. Okay, that's where TA technical analysis shines the most. We can read what the smart money is doing. I see some people complaining, right? Nathan, the market is rigged. Okay, the market is manipulated all the time. Well, the market is always manipulated, even by you. If you buy Nvidia over here, you see the price moving because of you. It doesn't matter how small you are, you will have a very small impact on this market. So it is manipulated every single time of the day, all right? But that's not the big question over here. That's not the problem, because if you don't know how to read what the smart money is doing, then okay, either way, you are lost. If you have no idea of how to control risk, okay, how to diversify your trades, your investments, how to set stop losses, you will still be just betting on the market. And this is precisely how people get so nervous and so anxious in this market, okay? Because it is precisely because they feel like they have no control of their trades, okay? They feel like the market is controlling their investments, okay? Now, when you work with a clear strategy, you will reject any possible emotion, any possibility of feeling stressed, of feeling anxious, because you are controlling your trades. You will understand that you can't control the market. The market is manipulated by many big players over here. But you can control your positions. You can control your account. You can set stop losses. You can set targets. You can set a very strict criteria to enter every single one of your trades, all right? And speaking by myself over here, I am extremely cautious. I am extremely meticulous regarding our trades over here. And some people complain about it, right? Nathan, you just want to see the most perfect situation, right? Even if you miss another rally, or even if you miss another collapse over here, right? You are so annoying. You have no fear of losing opportunities because you are so meticulous in this market. Of course not. If I were, that's where beginner traders, that's where amateur traders, those who are gambling in the market, that's precisely where these guys start to feel anxious, stressed, nervous. Okay, that's why they start losing control. All right, we all know that missing opportunities is not important. Okay, what is truly important is that we have a clear strategy that allows us to make money consistently in this market. Of course, we are all going to eventually, every single day, miss an incredible opportunity that's going on right here, right now. But we are not here to get rich quickly in one single day. We are here to make money today, tomorrow, this week, this month, and for years and years and years. All right? That's why it is so important for us to work with a clear strategy, okay, and not be affected by emotions. Guys, there are some fears that professional traders must overcome. Fear of missing out, fear of being wrong, fear of losing money, and fear of leaving money on the table. Okay, these are the 4 primary trading fears described by Mark Douglas on his phenomenal book, Trading in the Zone, right? If you never read Trading in the Zone, my dear friend, that's going to be the best book you are going to read about trading psychology, all right? These are the 4 primary trading fears that we all must overcome in this market. And how do we overcome? By having a clear methodology. Okay, guys, that's why I always talk about trading with strategy. That's why I always talking about trading without emotions, okay? Only following a good trading style. All right? If you do that, you will overcome all these fears. We are not here to be right all the time. That's not important. We are not here to capture every single opportunity. That's not important. We are not here to avoid losses, because that's also not important, okay? We are here to have a statistical advantage on this market using technical analysis while controlling risk. That's how we achieve long-term consistency. Okay, I just revealed the secret of the long-term consistency in this market to you, okay, for free. All right, and by the way, subscribe this channel if you're still watching this video, because this channel is clearly for you, my dear friend. Here we analyze many stocks every single day together, always in an unbiased way, or always focusing on what really matters, the key points, the key inflection points that could bring something new so you can work with your strategies. Okay, so that's what we do every single day on this channel. So subscribe and click the like button to support me as well. Okay, and right now this video has 20 minutes. Okay, so the teenagers, the Gen Z, the TikTokers, they are all left by now, so that's a good moment to ask you to subscribe, because, well, this channel is not for everybody. I know it is not for everybody over here. So our content is dense, is complex. We study the market very thoroughly, right? So this is it. Subscribe and click the like button. Now, Tesla, finally, Tesla, we see Tesla correcting today. Only 7%, all right? It is a very small, meaningless drop of 7%, only back to the 21-hour EMA, a completely normal, expected, not surprising at all movement, and this is it. All right, excuse me. Excuse me. Now we see just another harmless, meaningless pullback to this support level short-term wise. If Tesla actually reacts above this support level, fantastic. But guys, the key point for Tesla is still the 21-day EMA. Only if we see Tesla breaking and trading above this 21-day EMA, we are gonna see an actual bullish recovery from here, possibly reinforcing yesterday's bullish bar. All right, this bullish candle, which was very powerful, very intense, right above the 218 support level. So that's going to be a fantastic bottom signal if we actually break and close above the 21-day EMA, above yesterday's high, and that this could suggest another rally, possibly to retest the $300 again. And guys, if you ask me, it is more likely to see Tesla turning bullish than bearish. Okay, it is more likely, not investment advice. Okay, I'm not saying that Tesla is a buy right now, but it is more likely to see Tesla bouncing to higher levels from here. It is not going to be easy to see Tesla rejecting yesterday's low, okay, losing the 218's support level as well. It is not going to be easy, not impossible, but not easy at all. So it is more likely to see bullish continuation, but if by any means we see Tesla losing this support level, then it's over, all right? Probably the 182 is going to be our next major support level. All right, and guys, by the way, for you who want to trade stress-free without having to feel anguish or fear of this extreme volatility, you can become a member of our educational project, the 5% Project. There, you can learn to trade in practice with us every single day with full control of your trades, always trading using a solid strategy specifically designed to help you be consistent in this market. All the signals, all the trading strategies shared over there on our Telegram channel have stop loss point. I show you where to place the targets, and of course I always tell you the buy points, explaining why we are buying with all the technical reasons behind every single one of our movements before they are even triggered. Okay, so you can place your orders calmly. All right, we are a group of swing traders, not day traders, so you don't have to do anything in a hurry. It is completely free to test. You pay nothing to see how we work and to learn from us our method. All right, cancel whenever you want, no questions asked. We are over 200 traders right now, and if you want to join us, you are more than welcome to join a skin in the game community, a community of consistently profitable traders, all right? Always trading without emotions, without stress, controlling our trades, all right? That's how we do, trading calmly, serenely, okay? So join us over there. The link to my website is in this video's description, below in this video's description. All right, so Tesla's inflection point is this 21-day EMA, if you ask me. Now, AMD also has that, I mean, what a coincidence, right? All these stocks, apparently, they are reaching their resistance levels below the 21-day EMAs over here. If we see AMD breaking this key point, fantastic. It is going to possibly reverse the bearish sentiment, seeking higher levels like the 115 or maybe even higher. All right, but for now, we have yet to see confirmation, especially of a bottom signal on the weekly chart over here. Okay, and if we see bottom signal in this context, perfect, all right, just perfect. But we gotta wait for more confirmation. That's the main difference between real traders and gamblers, all right? Professional traders wait for confirmation, even if they have to sacrifice part of their gains, okay? So because we focus on long-term consistency, we are not here to catch the very bottom and sell the very top. If we try to do that, well, it is going to be a very frustrating thing to do, all right? And we are totally okay in capturing the movements, not by buying the very bottom and selling the very top, all right? Now, regarding Palantir, I do see the possibility of a bounce because unlike other stocks, we are above the 21-day EMA. Now, what's the next resistance level? $98. Nathan, what if we break $98? Because we are so close to this key point, right? Right, $125. The all-time high is going to be our next resistance level. Period. What could frustrate this bullish case if we lose yesterday's low? Very simple, okay? Let me do this very quickly, okay? Because this video has more than 5 minutes. I'm so sorry, guys. The Gen Z is never going to watch this video. Now, Meta found a resistance level below the 21-day EMA, all right, making a possible top signal. Possible top signal. What would trigger this top signal if we lose today's low? Okay, by losing today's low, all right, we are going to materialize a sharper correction back to the 498 area, okay, suggesting a frustration of this possible bottom signal on the weekly chart. But so far, okay, so far so good. As far as I know, we are finding a support level above the 21-hour EMA, and this is it. We'll see tomorrow. Tomorrow will be decisive for Meta, for Netflix, for Nvidia, etc. All these stocks. Either way, I'm gonna be here every single day. So again, remember to subscribe. Click the like button to support this channel, all right? Now, Netflix, this one is also this one is going to report earnings in 7 days, all right? And we do have a support area over here, okay, near this black line over here, right? Support level. We are bouncing to the 21-day EMA. Could this be a dead cat bounce? Yes, of course. But to confirm this idea, again, we gotta lose today's low first. As long as we don't, it is not going to turn bearish. However, we gotta break this 21-day EMA for real. Only then we are going to enter bullish territory again. And so far, there is not a single breakout in any direction. So we are still in a no man's land. However, it all depends on the direction of the next breakout, if Netflix will lose today's low or break the 21-day EMA, all right? Either way, I'm gonna keep you guys updated every single day on this channel. Join our Telegram channel for more signals, for more analysis and strategies like this. It is free to try, okay? See for yourself. Next Monday, we're gonna do another exclusive live with our members. You are more than welcome to join us over there to ask questions, see how we work, okay? So thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.